Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw another tough day in the market.
Yes, indeed. I was just checking breadth on the NYSE, and declining stocks only beat advancers by about 2.5 to 1. So at least breadth not so bad today. But we'll take a look at three stocks. Big move for Las Vegas Sands, LVS. Also take a look at Raymond James in the financial sector. Not much working in the financial sector these days, but RJF looking pretty good. And finally, Staar Surgical making a key test here.
All right, we'll check in on those charts, but first, a look at the major indexes. The NASDAQ, the hardest hit today, down 1.4%. We also had the S&P 500 down 1.1%. The Russell 2000 off by about 0.75%, and the Dow down some 0.6%. So the NASDAQ here closing, it looks like, below that low from September 6th that had a low of 11,471. So not quite. It looks like we closed at 11,552, getting pretty close there. But on QQQ, that is where we did see an undercut of that level for the NASDAQ 100. So those large cap tech stocks leading the market lower here, Ken. Definitely an area of weakness.
Yeah, and you can see that volume in the Qs as well today. Looks like it's coming in quite a bit higher than what we saw on Wednesday. So it looks like the Qs were the only index to move below that September 6th low. Like you mentioned, the composite S&P 500 still holding above. Actually, the Dow also didn't do it today, but it undercut that September 6th low earlier in the week. So the market is really on the ropes here. We've obviously been talking about this a lot, not only in the stock market today, but on IBD Lives. The market tide is flowing negative like this. You just want to be careful with your current holdings, and should definitely be favoring cash in your portfolio and kind of staying out of the market's way. It doesn't mean that you can't nibble here and there and try to capture some outperformance, but after today, we've got a market tide that definitely seems to be flowing negative.
Yeah. And alongside the declines for the broad market, we saw the 10-year Treasury yield on the rise, up by about 1.4% or so. So getting quite close to the same levels that we saw a couple of months ago in mid-June. Ken, your thoughts on the trend of the 10-year yield?
Well, it's interesting. You can see the 10-year yield is really holding stubbornly high here. I guess it makes sense as the Fed gets ready to raise interest rates again. I will say that the chances for a 75 basis point hike next week, at least I checked this morning, they had fallen quite a bit. So we'll either get 50 points or 75 basis points next week. We did have a lot of economic data before the open today. We had actually jobless claims that were better than expected. We kind of had a pretty good reading on retail sales. Overall, retail sales were better than expected, up 0.3% versus expectations for flat. When you look excluding autos, though, retail sales missed expectations. They were down 0.3% versus a flat estimate. And then we had contraction in a couple of major manufacturing indexes. The Philly Fed contracted, and so did the Empire State Manufacturing Index. So it would be nice if some of this economic data, continues to be a little weak, so the Fed isn't forced to aggressively, raise
Keep
rates.
Raising rates.
Yeah, so I mean, the economy is kind of slowing down on its own. Maybe the Fed feels like it's not going to have to be as aggressive. I think that's why the odds of that 75 basis point hike have fallen a little bit. So lots of economic data, but you can see this 10-year yield staying stubbornly high. Really doesn't want to go down.
Yeah, that it is. And even though energy was the strongest sector in Wednesday's session, taking a hard hit today. So giving back basically all of Wednesday's gain, down 2.6% today. Taking a look at UNG, that natural gas ETF, down almost 9% today. Ken, USO off by about 4%. So energy trying to get up and running here again, but getting whacked today.
Yeah, it's really tough, right? When you identify a pocket of strength in the market, sellers knock that down. So that's why it's so difficult to be long in a market like this, because you can think you can be right and buy a stock at the right time, and it'll go up for a little while, and then boom, it just gets whacked lower by selling. So it's a good trading environment, but you have to have a really short term view if you're gonna make any progress. I thought it was also noteworthy today. Utilities took a big hit. Now they tend not to do that very well in a rising interest rate environment. You can see XLU broke sharply below that 75 level today with some volume, also volume on Tuesday as well. So utilities under pressure. They tend to carry a lot of debt, which obviously becomes a little more expensive to service when interest rates are going up. So not surprising to see utilities lag here, even though they're known for paying pretty good dividends.
Yeah. Well, on the upside, what did have a good day were casino operators and hotel travel related stocks. So let's go to LVS, Las Vegas Sands, up 4% today. Some strong volume behind the move. And for the most part, this bottoming base, Ken, has seen some pretty quiet volume. So the uptick in buying today definitely stands out on this chart.
Yeah, it's a really nice technical setup here, but what we found during periods when the market is in a distribution phase like it is now, some of these patterns have a hard time working. But this one is worth watching. It's trying to make another run at the 40 level here. You can see a few times it's bumped up near 40 and has been turned away. But there was good volume in LVS today. Didn't really see any news driving the stock, but I did notice that Wynn Resorts, WYNN, got an analyst upgrade today. So I'm not sure why that would lift Las Vegas Sands so much, but good volume in LVS, and appears to be ready to make another run at that 40 level.
Yeah, you make a good point, Ken. Just because we are seeing constructive action in certain pockets of the market doesn't mean that we're going to be buying stocks. That it definitely just helps us get a sense of what areas of the market are holding up better than others. Because if the leadership isn't in areas where we would expect them to be at the beginning of a strong move, like in a lot of growth stocks, that definitely says something about where we're at in this market. But what do you think about the kinds of stocks that we should be focusing on right now?
Well, I mean, like you said, it's important to pay attention to stocks that have relative strength lines that are moving higher, and you certainly have that with LVS actually poking into new high ground during the stock's latest consolidation here. So, in terms of LVS, their major presence is in Macau, off of mainland China. They used to have a very dominant presence in Las Vegas, not so much anymore. So a lot of their business is in China, and China's been dealing with COVID, but I think the casinos have opened up in Macau. So this is a turnaround story. You can see revenue has declined in recent quarters, but you do have a really big estimate next year for 2023, expected to earn $1.37 a share. So you'd expect revenue to start to ramp up pretty soon here. But yeah, just very important. When we're picking stocks for the stock market today video, we just want to highlight the strength in stocks that are saying, hey, I have a chance of going higher here if the market conditions can improve.
Notable action, no doubt. Well, now let's take a look at RJF, Raymond James Financial, which is holding strong here. Speaking of that relative strength line, we've got a blue dot showing up on this chart, signaling outstanding price performance versus the S&P 500 as this base is forming. The stock up about 0.6% today. Volume has been light in this handle, and it's approaching once again that 110 area.
Yeah, and it really is hard right now to find stocks in the financial sector showing relative strength, and that's a bit of a head scratcher because financials tend to do well in a rising interest rate environment. So, but you just look at XLF really quick, which is sort of your benchmark financial ETF, and you see that the technicals here still look quite weak. You can see a relative strength line that's just been kind of flattening out, starting to move higher a little bit, but still below its 41 52-week moving average. So not much good happening in the financial sector, but Raymond James, which is an investment management provider of advisory services, really in a nice setup here. You mentioned that relative strength line and new high ground. So definitely on the watch list here. You see revenue growth slowing down a little bit, but again, you've got a pretty weak estimate for this year, but growth ramping up next year with earnings up about 29%. So also has the look of a turnaround story here. And I think if you're interested in financial stocks, this one should be front and center on the watch list. And I will say that there's another stock in this group, LPL Financial, which has gotten a lot of coverage in IBD LPLA, similar business, also in a very good setup here. You can see that relative strength line has just been shooting higher forever. So both Raymond James and LPL are definitely stocks to watch in this investment bank group.
That they are. And last but not least, let's take a look at STAA, Staar Surgical. It did reverse lower, closing down about 2.5%, but a strong move on earnings in mid-August, and it's been pulling back to the 50-day line. Looking on over at the 10-week, it is pretty close to that key 10-week level. Ken, we've been talking a lot about how early entries have been the way to go if you are going to put a little money to work in this market, and pullbacks and bounces off of the 10-week line are one such early entry to be looking at.
Yeah, this stock was looking really good before the market started to sell off today. It was trying to break out over a little trend line on the daily chart, but weakness in the broad market, pulled it down. But this company, they make implantable lenses for the eye that are used in corrective and refractive surgery, and you can see just looking at the revenue growth and that really positive response to earnings recently. The growth is very, very strong here. Good revenue growth in recent quarters, and you got two big estimates. Annual earnings expected to be up nicely this year, also up nicely next year. And those little green arrows just tell you that estimates have been headed higher for this one. So pretty good fund sponsorship. It's on my watch list. I just want to see what the test of the 10-week line looks like. Right now, this is a test. If by the end of this week, by tomorrow, maybe it can rally and close up near its weekly high. That may be a tall order in this market, but we'll see if Staar Surgical can hold support here. But I think it has a lot of the N in Can Slim, which is new. They've got a new product that's driving good growth, and I think it looks pretty good here.
Well, thank you, Ken, for putting these stocks on our radar. We appreciate it. And I opened up a couple of panels and looked at different views on the MarketSmith chart. And if you are curious in learning more about the powerful tools that MarketSmith has to offer, make sure you take advantage of our MarketSmith free access week. More details at investors.com/ms free access. Also, make sure you are tuning in tomorrow morning to IBD Live, investors.com/IBD Live, our daily morning live stream, where we're talking about actionable trade ideas, portfolio management strategies, our take on overall market conditions, and so much more. Tomorrow, we will be joined by special guest George Tachuk. He is one of the U.S. investing champions from 2020. Always good to have him on the show. Looking forward to welcoming him back. And that is it for us today. We'll see you right back here tomorrow, everyone.